Looking to learn how you can pay off a 30-year fixed mortgage in 5 to 7 years? Then you're gonna wanna watch this video. What's up guys, welcome back to my channel, a place where I teach you everything about investing in stocks, real estate, other financial markets, as well as wealth building strategies. That's the type of content that you're interested in. Be sure to subscribe and hit the notification bell so you never have to miss a single upload. And if you like this video, be sure to destroy the like button for the YouTube algorithm. It truly helps on my channel when you do that. Let's dive right into this video. All right, so diving right into this video, there's many people who have the desires and goals to become homeowners, which I think is a great goal to have. However, most mortgage loans are designed for people to spend nearly a lifetime paying them off, and statistics even show that most people don't even actually go through to pay off a 30-year fixed loan on a home loan and just eventually end up selling the home at some point during the process. But in this video, I'm actually gonna give you a different type of perspective. See, for the average Joe that's not making a lot of income, it's gonna be very hard for you to develop a wealth building plan if you're not making a substantially high income, especially if you're talking about doing it at an accelerated pace. And that is the reason why on this channel, I talk a lot about investing in real estate. And that is the reason why I'm gonna show you exactly how you can use real estate investing to not only own the home that you live in, but actually build substantial wealth. Let's dive right in. All right, guys, so for the purpose of this video, I'm actually gonna pull out my computer, but I'm going to put on the screen what you also need to see, what I'm looking at, so you can see exact thing that I'm looking at. So you see me looking down, I'm looking at the screen. Pay attention to what you see pop up on the screen, because that's exactly what I'm looking at. So for the purpose of this video, we're gonna use an example to say that you have a house that is worth $200,000. It's a 30-year fixed loan at 6%. So I put the numbers here on the screen so you can see them, so that you can remember them. But it's $200,000 loan at 6% on a 30-year fixed loan. All right, so assuming that you only put down 3%, which is a minimum for a lot of first-time home loans today, or many loans today that you'll see done. So let's assume you only put 3% down, which is about $6,000. So if you put that down, that would mean that your loan amount would be $194,000 at the 6%. And your principal and interest payments alone would be $1,163, not including taxes, insurance, and private mortgage insurance, which would probably bump your total monthly payment to a little over $1,700. So using this example, if you were to go 30 full years on this type of loan structured this way, you would pay $224,725 in total interest, which is more than the actual total principal of the loan that is due. Here's what I would recommend for an average Joe that wants to actually pay this loan down in 5 to 7 years. So let's assume that you go 1 to about 2 years after getting your mortgage loan, and let's just say you build up some money for another down payment. So let's say you're gonna do another down payment, but the second down payment or the second loan that you're gonna take out is gonna be for an investment property. What you're gonna do in this case is that you're gonna utilize the second investment property to create what is called positive cash flow. And the positive cash flow from that second property is how you're going to actually be able to pay off this home loan, the first home loan that you have, which is your personal home. This is how you're gonna be able to pay this off. See, I'm not a person to teach you on the basis of just completely draining your own finances to do this. I believe in actually leveraging assets and allowing those assets to pay for not only the lifestyle that you want, but pay for the things like your home loans or your car loans, or the things that you would own that are going to be these really, really large expenses that usually lead to us not having enough money to actually build wealth or invest in other things. So let's say that you actually go off and you invest in what is called a multifamily home, a 4-unit multifamily home. So that's 4 units. And let's say that you bought the property for $180,000. And let's just say, to keep it consistent, you put 3% down. And this time, because you already have a mortgage that is established, and you probably built up some credit in a 1 to 2 year gap, you'll be looking at about a 4% interest rate, which is competitive for what people who have really good credit are able to get these days. So let's say that each unit, let's say that the area that your property, that your rental property is in, let's say that each unit is able to rent for about $1,200 a month. That would give you a gross income from that property of $4,800. Now, if you're looking on your screen and you can actually see the numbers for this actual property here, you will see that the payment on this property is about $1,374. We're gonna bump that to $1,500 as a buffer. I'm not gonna go into detail on why you would do that in this video, but you're gonna factor in maintenance costs, some property management costs that you would have, and things of that nature. So you would put that buffer of, we just bump it to $1,500 in this case. So utilizing those numbers, that would leave you with a net profit, or in this case, a positive cash flow of $3,300 a month. So what your then in turn is gonna do is you're gonna take the $3,300 a month and you're going to put that into the principal of the loan every month, in addition to the $1,100, $1,200 payment that you're already making every single month, that is going into, the interest and the principal. See, the reason why this is going to benefit you is because most loans, you start paying off the interest first. So the big bulk of your payment, especially in the early years of that actual loan, you're paying interest and only a small amount is going towards the principal. Well, if you want to pay off the loan faster, paying off the principal is actually going to minimize the amount of interest that you're going to owe. It's just like anything with a car, with a credit card, anything that is pertaining to credit that has interest, you're only charged the interest as long as you have a balance. If you don't have a balance, you can't be charged interest on a balance that you don't have. So the quicker you're able to pay down the principal balance, the shorter your interest period is going to be. So that means that you're going to actually be able to save a substantial amount of money in interest by actually paying the loan off early. So if you're looking on your screen and you're able to see the numbers here. So we have the schedule. So we have the schedule payment of $1,163.13. And then the total with the additional payment is $4463.13, which, if you can see here, the total length of how long it's going to take you to pay off your 30-year mortgage utilizing this strategy that I just taught you is 4 years and 2 months. The time saved is going to be 25 years and 9 months. And the interest savings is going to be nearly $200,000 that you're going to save on this loan in interest. And it only took you 4 years, 2 months to do it. And if you tackle on maybe a 1 to 2 year wait period between your first mortgage and your second mortgage, that is how you're going to be able to do it realistically in 5 to 7 years. So how this is applicable, or how this can be applicable to the average person, is because investment properties are looked at differently from our own personal residence. So what I mean by that is that when you have a rental property that produces what I taught you as positive cash flow, you utilize the cash flow from that property, or the potential cash flow from that property, to actually help qualify for it. So in theory, the mortgage loan officer that you're going to work with is going to see that you already have a current mortgage loan, and you're actually going to buy this property as a 100% investment. You're not living in it. So this actually is considered a much better loan situation than, say, if you were buying this to actually live in it and it was actually going to be a residence of yours. So this is what a lot of people don't know. And this is why real estate can be extremely powerful of a tool, because in 5 to 7 years, you just paid off a property that's worth $200,000. So that means that you can sell that house after that period and you could get that full amount in your pocket. That's how you build wealth. I like that idea. And the average American isn't retiring with over $100,000. So the average American isn't retiring with over $100,000, but you just saw how you can create $200,000 in potential wealth within 5 to 7 years. Why wouldn't you want to invest in real estate? See, I know a lot of people get into real estate investing with the idea of flipping houses or wholesaling real estate. But what they don't tell you is that this is actually, what I'm teaching you right now and how I'm teaching you right now is actually the strategy that is actually going to build you substantial wealth. Like, this is actually something that is going to increase your overall net worth. Not just, put some quick money into your pocket, but actually build wealth. Implementing this strategy is a powerful tool for your wealth, because once you pay off that mortgage, now you got $3,300 in additional cash flow, plus you freed up the $1,200 a month that you were paying in your regular mortgage. So now you have close to $4,500 in just liquid cash flow that you can use to invest in other things. And you can either start applying that into your investment property to actually pay that down faster, or you can utilize that investment property as like your own personal banking system, which is what I teach in my program. And you can use that to reinvest that into either other real estate or stocks or other opportunities, or maybe you want to start a business or whatever the case is. Now you have cash that you can actually put and apply to actually strengthen your wealth and actually build and develop your wealth. So what I want to do before I end this video is that I want to take the limitations off of your mindset that you placed, or that you have learned over the years to place on yourself. There are people that have credit scores that are sub 600 right now that are getting approved for single family homes. You don't have to be in a situation or make yourself believe that you can't buy a house because you don't have like a super high credit score. That is the biggest lie ever told, and I'm gonna debunk that right now from your psychological mindset. You're not going to be in a position that you can't afford to buy a house. You can afford to buy a house no matter where your credit is. You don't need to have this great credit. The biggest thing that you need to focus on is positive cash flow, keeping your recurring debt to a minimum, car notes, your credit card payments, keeping those things to a minimum, and making sure that you have no late payments, you have no missed payments and things of that nature. If you don't, you can have a 595. You can still get approved for a loan. And once you get approved for that loan, you focus on, make sure it's something that you can afford monthly, comfortably. Then you focus on, after about a year or two, or getting a feel of that, then you focus on getting you a second property that is an investment property. Or you can flip this and do this backwards, get an investment property first, house hack, live in that, and then use the money from that to buy or build the dream home that you want. It works either way. But we're no longer going to tell ourselves that, hey, I can't afford this, or hey, it's too hard for me to do, or oh, I'm not ready to buy a house. It's like, that is a big boatload of garbage. And I'm not going to let you watch this channel and actually think that and believe that and feed that to yourself anymore. Like, I'm going to tell you that you can buy a house. You can be an owner of real estate, and you don't have to be rich, or you don't have to be better off financially to do so. Call a mortgage lender. Get on the phone with people who actually do these types of loans. Do some research and figure out what you have to do to start to get into a house and to get into a property, so that you can start getting towards the process of building and developing out wealth. If you're somebody that says, hey, listen, I love the way this sounds, but I'm gonna need a little bit more help, then you're gonna hit the link down in the description, because this is what I do every single day with people who are a part of my program, that are part of my community. I teach you these strategies as well as other wealth building strategies that will help you to be able to build your wealth no matter what level you are at. So if that sounds like something that you're interested in, hit that link down below. All right, guys, it's gonna be the end of this video. Hey, listen, I want to thank you for sticking around and hanging out with me. I truly appreciate you guys for every view that you give me, and every time you come and you hang out with me like this. If you like this type of content, subscribe, hit the notification bell so you never miss a single upload. I've been uploading every single day. I've been trying to give a video every single day. I want to be able to keep that schedule for you guys. Remember, you're only one decision away from changing the entire trajectory of your lives. I will see you guys in the next video.